Good afternoon, everyone, and welcome to the third in our instalments of seminars throughout the day today. This one focuses on blanket assessments and the effects on the contracting industry, how it can be avoided, and how you as contractors can seek to prevent that. My name is Rhys Thomas. I'm joined today with my colleague Tom Wallace, Director of Tax Investigations at WTT, and we're going to talk through the blanket assessments and what can be done. Firstly, a bit of housekeeping. For those of you unfamiliar with this platform, there is a questions box on your panel. Feel free to ask any questions throughout the session, and we will, of course, answer them as we go along or at the end, depending on the appropriateness of the timing. So, start with, there's a small introduction to WTT Group for those unfamiliar, although a number of you on this call have been on the previous two sessions as well, and therefore I'm not going to go into too much depth on that, but I'll leave it there for you to read and digest. On to the agenda for today. As I explained, we begin talking about the types of blanket assessment that we've seen so far, why they present an issue for contractors, agencies, and the end client, ways the supply chain can overcome blanket assessments, and how you as a contractor can avoid blanket assessments. I'm sure many of you will be familiar with the IR35 reforms, but for those who haven't heard too much about it, clearly IR35 has been in place since 2000. It was first mentioned in 1999 as an HMRC briefing paper and was introduced as legislation in 2000. Put as simply as possible, it's designed to counter tax avoidance or perceived to counter tax avoidance via personal service companies, where someone performing the services through a PSC is performing substantively the same work as someone who is employed directly by that end client. Due to be reformed in April 2020 initially, but postponed until April 2021 in light of coronavirus, the principles to IR35 remain largely the same. There is just a shift in the liability, the party liable for any eventual tax liability, and also a shift in the entity determining the IR35 status for the chain. So those are the two important changes which we'll go through now. As I say, as a result in the shift of compliance and liability earlier in 2020, when the IR35 reforms were due to be introduced, we saw in the market a huge increase in blanket banning and blanket determinations, both as detrimental as each other for various reasons, both commercial, practical, and compliance. They do have different consequences, but both can be avoided. I think that predominantly these type of reactions were a reaction due to an unknown. A lot of banks initially started carrying out these initial blanket bans and blanket determinations, and a lot of the market followed suit. Our aim through the process of this presentation is to explain why that's wholly unnecessary, wholly damaging, and where a motivation for blanket banning or blanket determining is compliance, we think the opposite is true, and it presents potential compliance issues throughout the process. So blanket banning is obviously where an organisation as the end client announces that they'll no longer work with any personal service companies at all. Typically, they will only engage with contractors on a full-time contract basis inside IR35 or as an employee. A blanket determination is slightly different. This is where a company determines that all temporary contractors, temporary workers, are operating inside IR35, and that determination is based on their role or a wider workforce, general workforce determination, and it applies an inside IR35 determination to all temporary staff. So what are the effects of both? Clearly, there are a wide range of effects on the market, but three important points here. we conducted a recent survey of our clients, our contractor clients, and of those, 70% of respondents said that if they were determined to be inside IR35, they would leave their contract. Similarly, the respondents indicated that the two most important factors of being a contractor and choosing a contract and choosing who to work for were both take-home pay and compliance. And finally, 62% of respondents had noticed a reduction in available roles over the last 6 months as an anticipation of the IR35 reforms. And these 3 points are really important to consider in perhaps a little bit more depth. Naturally, as we say, blanket banning and blanket determinations will contribute to contingent workers leaving. And we've seen there that where determinations are blanket made, they are blanket inside IR35 determinations. And as we show on our survey, a representative proportion of the industry, 70%, said they would leave their role if they were determined to be inside IR35. That presents a big risk to projects ongoing, and we've seen a lot of projects stall as contractors prepared to leave when the blanket bans began, kind of February time earlier this year. There are platforms such as off-payroll.org, which is a very useful platform to look through as a contractor to identify which end clients are making sensible, reasonable assessments, which agencies are working fairly and communicating well. And it's very easy for contractors to pick where the right contracts apply, where fair contractors, where fair end clients and fair agencies are working, and therefore as a result which to work. So it's natural that the talent pool will gravitate towards the fairer agencies and the end clients producing fair determinations. So blanket banning and blanket determinations will naturally reduce an end client's talent pool, and that's an important consideration, especially in light of coronavirus and the rebuild that the UK economy will go through, where contractors are going to become ever more imperative to the continuing development of projects and the continuing growth of our economy. Secondly, if a worker's key motivation is take-home pay, a movement inside IR35 is severely going to affect that, leading to, as I say before, a departed contingent workforce. Obviously, a full tax as an employee, and typically where pending the 6 Cats case that's just gone through, where employers' national insurance is being deducted as well, there is a big difference between working as a PSC and working as a full-time employee as a contractor. It's likely that people will probably prefer to move inside as a full-time employee rather than a deemed employee for the purposes of IR35. The effect of that is obviously that the end client is going to suffer higher rates of tax as employers' national insurance, and similarly the contractor is going to suffer higher rates of tax. So it's not beneficial in terms of retaining a sensible and effective contingent workforce. Finally, the other motivation for contractors in choosing their contract is compliance. As I say here, through blanket banning and determinations, IR35 legislation very clearly states that end clients must take reasonable care when assessing the status of each contractor. To make a blanket determination, therefore, based on a type of role or based on the entire workforce, cannot be deemed to be determined as reasonable care. So looking a little bit more specifically into reasonable care, and it's an important consideration for all parties in the supply chain, because if end clients don't observe the reasonable care requirement of the draft legislation, HMRC will determine that the tax liability for an inaccurate assessment remains with the end client, not the fee payer. So the end client has to have shown reasonable care in coming to the determination to then pass that determination to the fee payer, and the worker then must know the determination as well. If they're shown not to show reasonable care, then the liability can remain with the end client, not the fee payer. And so there's a huge risk there that the end client will remain liable for an inaccurate or unreasonable determination. Similarly, failure to exercise due care may result in IR35 focused insurance policies being invalidated, because typically an insurance policy which looks at managing or insuring for the eventual IR35 tax liability requires the element of due care and individuality in terms of assessing the contract and the working practices on an individual basis. So it may well find that insured liabilities are not so insured as a result of the failure to take reasonable care in the determinations. So the question is, how can it be prevented? How can you as contractors prevent this? How can agencies prevent this? How can end clients prevent this happening? And end clients risk losing their contingent workforce, contractors risk a lower take home and increased risk through indemnity clauses, which I'll come on to talk about, and agencies risk losing their talent pool as a result. So every member of the supply chain is going to get squeezed as a result of these blanket determinations. So how can they be avoided? The first thing contractors need to do is carry out your own determinations independently. There are a number of tools that you can use. There is the CES tool, which is provided by HMRC. However, it has attracted wide criticism, and HMRC have themselves indicated that it cannot be relied upon in any ongoing investigation. Therefore, recommended that you get a proper review conducted by a third-party company who is expert in the field and can go through both your working practices and your contract to look for both onerous contract clauses, questionable clauses in the contract which may contradict your IR35 assessment, and opportunities for you to remain working outside IR35 where there are practical reasons to do so based on your working practices and contract. Using that, you can use that to inform a discussion with your end client or agency well in advance of the reforms. We still have a number of months before the reforms are going to kick in, and at least half or just under half of our respondents hadn't yet heard from their end client or agency about IR35. So there's an awful lot of unknowns, there's an awful lot not going on and not being conveyed. So we would always recommend you take the advantage to go and speak with your agency, speak with your end client, and talk about what's going to happen further down the line. I appreciate that not always the agencies are kind of clued up or advanced in their discussions on IR35, but it's very, very important for all entities in the chain to do so. We act on behalf of a lot of our clients for free, and talking to those agencies on their behalf, talking to the end clients and engaging in these kind of discussions to make effective determinations. It's important that you do that. In our experience, sitting down with agencies and sitting down with end clients and talking through the risks and the ease of making sensible determinations really does change the outlay in terms of blanket assessments and blanket banning. So it's an important thing to do. However, as I say, this is not always possible, and agencies may in turn determine a blanket determination is still being made. And when the reforms come through, there is a requirement for every end client to have a disagreement process. And that disagreement process puts the onus on the end client to respond within 45 days with either a revised contract or a revised determination, or setting out the reasons why their determination remains the same. Again, the reasonable care requirement applies to that. And so using your third-party determination that you got to raise a complaint and have that discussion with your end client puts in place a formal disagreement procedure where previous conversation might not have been possible. The disagreement process should allow you more scope to discuss with the right people there. So That's an important provision as well that you'll need to be looking to use. Those don't need to be in place right now until the reforms come into place, but you should be communicated, and those complaints procedures and disagreement procedures should be visible. So all end clients must be preparing for that to be put in place. As I say, our approach that we suggest for contractors is that you do need to prepare well in advance for this and take the initiative to have the discussions with your end clients and with your agencies as soon as you possibly can. HMRC statistics on the CESS tool from the source down there at the bottom, check of employment status for tax CESS 2019 enhancement summary, published in 17th of March 2020, shows that of the determinations which showed a determination through the CESS tool, 50% of the determinations were outside of IR35. Therefore, stands to reason that the majority of contracts should be based on an outside IR35 determination, resulting in blanket determinations and blanket banning wholly unnecessary and too much of an unintended risk for the parties in the chain. So our approach is twofold, for contractors and then for clients and agencies. We typically provide contractors with status determinations, working practices reviews, and contract assessments on an impartial and unconflicted basis. I've explained the benefits of those, and those can be used on an impartial basis to have the disagreement process or have the discussions with your end clients. Working with groups of contractors, we've also established small consultancy arrangements which, where used correctly, the consultancy arrangement can take you outside of the scope of the IR35 reforms, keeping the onus on the status determination on the consultancy itself, not the end client. That needs to be a business-to-business engagement between the consultancy and the end client, but it presents more of an opportunity to retain control and not fear the risk of losing control to the end client felt through the reforms. So we've helped people there as well. And as I said before, we also act on behalf of a lot of contractors in terms of going to discuss with their end clients and with their agencies the changes anticipated. There is not yet any kind of formal disagreement process put in place due to the reforms not going through just yet. So at the moment, our work is on behalf of contractors going to speak with their agencies, but in time we anticipate that also being through the disagreement process. And for end clients and agencies, we implement comprehensive status testing platforms conducted by an individual, an expert within our law firm, and a compliance framework, which we think adds transparency to the supply chain. And the major benefit of that is always that reasonable care is ensured because an expert is conducting that. And what that allows is for all entities within the chain, end client, agency, and contractor, to understand the basis of their working arrangement, to understand why IR35 is important, to understand how the working practice should be adhered to, and to simply ensure compliance all the way along. The compliance is really important because we've seen the rise of indemnity clauses in contracts, shifting risk from the end client for an inaccurate determination to the contractor PSC. You must watch out for onerous clauses like that, but there really is risk in the whole chain of this process of blanket banning and blanket determining. So I would strongly urge all the contractors out there to work through this with your agency, get in front of them, do your research and understand your own position and your own working practices, and make your case for why remaining outside, if that is appropriate, is the right thing to do for everyone in the chain, and that blanket determinations are not the right way for everyone in the chain. So that's a very short summary of the position on blanket planning and blanket determining. Intended this to be a short, spotted kind of summary of the position. If there are any questions now, I'd be very happy to take them. There's none yet. Okay, no further questions. So on that basis, we'll leave the session here for now. Up next at 1 o'clock today, will be Keith Gordon, barrister at Temple Tax, talking through IR35 cases and of course talking what we can learn from those previous cases in terms of planning for next steps. And then later on today at 2:15, we have insurance firm Cypher Risk talking through life insurance for contractors and planning and why there are tax efficiencies and why there are huge benefits to considering life insurance to protect your financial future and of course the future of your families. So we hope to see you at some of those other sessions, but for now we'll leave this session and hope you have a good afternoon.